Toot toot. Good afternoon. It's good to see that some people have taken the challenge with the coronavirus and showed up here live anyway. Welcome. Today I want to inform you about our results. Firstly, I want to talk about the Q4 results and the full year 2019. Then I will discuss a bit more about the different businesses we have, and then I will update you on our strategy and also our target for 2020. Firstly, a brief introduction of our company. We are in business for over 40 years. We are listed on the stock exchange since 1994. We have in Thailand 4 factories where we operate frozen seafood business, 2 factories in that segment. In Suratani we produce frozen shrimp products and squid. In our Samut Sakon factory we produce frozen shrimp and silago. That's a small fish that is sold to Japanese market. And in our Samut Sakon, another Samut Sakon plant, we also operate our tuna and pet food business. And then we have in Petburi a factory where we produce aquaculture feed. And in outside Thailand, we have a majority ownership in a factory in China where we produce pet food, dry pet food. So we have structured our business accordingly in Asian Surat, Asian Alliance, Asian Feed, Asian Food, and APCC, which is the new name for our company where we hold our intellectual property, our brands, and also our shareholdings in other companies. As I mentioned, our history dates back quite some time, and for your reference we have put a timeline here with many events. I want to zoom in a bit on what happened in the last year, in 2019. In 2019 we have spent a lot of focus on introducing our own pet food brand called Monchu. We have been in pet food for over 10 years, but most of our business is OEM, so we produce for other brands, and that's a good business, but in the longer run we think it is important to have our own brand as well, and that's what we have launched. The launch took place in China and in Thailand. In the future we will also roll out this brand in other Southeast Asian countries. In 2019 we also obtained our credit rating. We applied for this process with TRIS, and the result was a BBB- rating with a stable outlook. Recently in early February we got confirmation from TRIS that this has been extended, so we continue the same rating also this year. We have formulated our strategy document which is called Ambition 2020, and this strategy was prepared around 4 or 5 years ago. What we have done is we have updated this, and in fact we have not changed our strategy a lot, but we have updated the targets and made it fitting the actual development of the companies. Like I mentioned earlier, one important milestone is the establishment of our Chinese business. We already had a sales and distribution business operating from Guangzhou. And we have extended that with a 51% shareholding in a pet food factory in Shandong in the middle of last year. Back to the financials. First, Q4 2019. On the right side table you see our financial profit and loss statement. Our sales was a little bit lower than 2 billion baht in Q4, and that is a decrease of 23% compared with the year before. Our gross profit was 150 million, and that's also a significant decrease compared to the year before. Our SG&A more or less in line with 142 million, and that resulted in an EBIT from operation of 8 million baht. We report separately other income and exchange rate gains. Now the other income is mostly a refund of import duties, which is very connected to our operations, and the exchange gain is related to the hedge contracts that we make in order to secure our gross profit in the sales that we make. So altogether our EBIT was 40 million baht, financial cost 23 million, significantly lower than last year, and that is a result of lower outstanding debt and also lower interest rate. And altogether a net profit of 17 million, which was much lower than the year before, and altogether of course much lower than what we have budgeted. There are a few reasons for that, and if you look at the left side table, you see the developments in volume and sales revenues for each business segment in Q4. Overall, in Q4, our sales volume was more or less flat, a small decrease of 3%. But if you look into the different segments, then you see that our frozen business declined with 29%, and that is the result of our decision to terminate the commodity shrimp business with the US. This business was not profitable, and we did not see any change of that in the foreseeable future. So that explains the decreased activities in our frozen seafood business. In our tuna business, we have seen a big increase of our volumes with 37%. Business is good. We are operating in a segment in the Middle East mostly, and there we have some good developments and increased demand of existing customers. We are also expanding our customer base there, and that explains the increased volume of our tuna. Pet food business and fish meal, we are recovering from a bit of a slow period in the middle of last year, and we have grown this business with 12% compared to the year before. Our aquaculture feed business grew 5%. In aquaculture feed, we are very much depending on the farm level in Thailand, and shrimp is an important species, and the shrimp farming results are very similar to last year, so no big increase. And as a result, also our business has not grown very much in that sense. Our distribution business is declined in volume. This is a bit of an opportunistic business. So we look at our margins for each transaction rather than only volume. On the revenue side, we see an overall decrease of 22% in Q4 compared with the year before. And in the frozen business, this is 32%, and that's mostly related to the lower volume that we have sold. In tuna business, we see an increase of only 2%, whereas our volume has increased 37%. And the main reason here is that tuna price was much lower in Q4 than the year before. Another thing is tuna is sold in dollars, and the dollar exchange rate was around 10% lower than the year before. So those two effects decreased our revenues. On pet food, we have a 19% decrease. The same is true for our pet food business, mostly dollar denominated. So around 10% of these lower revenues are explained by a lower exchange rate. The other 9% has to do with product mix. We have attracted new volumes with new customers, but some of those are in the lower end of the market and selling at a lower price per kilo. So that explains the lower revenues compared to the volume sold. Our aquaculture business minus 1%, more or less the same as last year, and our distribution was down as a result of our lower volumes as well. So all in all, in Q4, stable volumes, but lower sales revenues driven by prices and driven by exchange rates. Looking at the full year 2019, looking at the table on the left upper side, overall our volume was flat, minus 2%, with a similar trend as in Q4. Frozen business down 13% as a result of the termination of commodity shrimp to the United States. Tuna business up 25%. Our pet food business more or less stable. We had a strong Q1 last year, then we had a soft Q2 and Q3, and we had an improved Q4 again. So altogether flat in volumes. Aquaculture feed also flat. We had a similar story. We had a strong Q1. Farming of shrimp increased and our shrimp feed increased, but the second half of the year was quite disappointing in terms of farmed volume due to biological issues and also relatively low prices to the farmers. In the revenues, you see the similar trend as Q4, 13% down, despite a stable volume. Frozen, 19% down. That was due to volume and to exchange rates. Tuna business, 8% up. Again, we sold at a lower dollar, and the average tuna price was lower than in the year before. Our pet food business, 20% down in value. Around 8% is due to dollar exchange rates and the other in product mix. Aquaculture business was flat, and our distribution business was in value a little bit higher than the year before. Looking at the full year profit and loss, our sales revenues were 8.2%. That was 15% down compared to the year before. Our gross profit was 652 million baht, which is a decrease of 35%. That was offset by a little bit lower SG&A. Now, those two numbers are not completely comparable because in the meantime there has been an accounting standards change, allocating some cost from SG&A into the gross profit. So there is a bit of apples and oranges comparison. In our EBIT from operations, we booked 94 million baht, and including other income and exchange rate gains and a limited amount of non-recurring benefits, we booked an overall EBIT of 241 million baht. Our financial costs were much lower than the year before. Again, lower debt outstanding and lower interest rates, and as a result, our net profit came down to 133 million baht, which was a 60% decrease compared to the year before. Looking at the underlying reasons, this is very similar to our Q4 results. Our gross profit was heavily affected by exchange rates. In our pet food business, we operate at under long-term contracts with fixed prices. Those prices can be changed, but that requires some negotiation process, and we have done so in Q4 last year. So going forward, we are working at new prices that reflect the current exchange rate. But there was not much benefit of that in the 2019. In our frozen business, we work with shorter term contracts, but nevertheless, those terms are also 2 to 3 months, or sometimes a little bit longer. So updating price and renegotiating prices is a continuous process. Now, last year, we have seen every month lower dollar, so we were always running behind the new prices, and that has affected our business. Operating at a lower dollar rate is not a big problem in itself, as long as it is more or less stable. We can adjust our operations. Once it's fluctuating every time, then that becomes a bit of an issue. So this was one reason. The other reason was the performance in our frozen seafood business, where we still took the consequences of a low profitability in the commodity shrimp business to the United States. We have terminated that, and we have also restructured our cost level, and that in itself also came with some restructuring cost. Those are the main issues we had in 2019, and I expect these not to recur in this form in 2020. Here you see our quarterly sales and gross profit numbers. Traditionally, you see that we have a slower first half of the year compared to the second half of the year. This has to do with livestock, which is usually growing better in summertime than in the winter time. And actually, this dependency on seasonality is getting less as our pet food becomes a bigger part of our portfolio. The seasonality is also less, and I expect this trend to continue. In the lower graph, you see our gross profit margin, and it is superimposed on the development of the US dollar Thai baht exchange rate, and there's a fair correlation there. As I mentioned, we can adjust our prices and our gross profit, but there is some delay in that whole process. Looking at our working capital, in the lower left side you see our net working capital days, 99 in Q4 last year. And this is a big improvement compared to a year before, when we were operating at 120 days. The main reason is a much lower inventory level and improved accounts receivable level. This has resulted in a lower working capital. Apart from the days, also the absolute amounts, of course, have gone down. And that has been generating more than 800 million baht in cash flow. Our return on equity was 4.7%. That was a result of our lower profitability. And also we have, over the past few years, retained earnings into our equity. And that has improved our balance sheet, but also it affects our return on equity, of course. Further in our balance sheet, we are very pleased with the developments there. Our debt to equity ratio is 1.1, and our net debt to equity ratio has decreased to 0.8. Those are pretty solid ratios. Also, our net debt has decreased from 2.8 billion to 2.2 billion baht. If you look at the way we have financed our balance sheet, it's mostly in long-term loans, 57%, and then the remaining is short-term portion of long-term and short-term facilities. So we are adequately financed, I would say. In the short-term facilities, we are utilizing less than 30% of the facilities that we have. So there's no pressure on cash whatsoever. Looking into our businesses, firstly the pet food business. We have a factory in Samut Sakhon where we produce wet pet food. We have 38,000 tons of capacity. Our strong point is that we really position ourselves as a co-developer. Together with our customers, we are developing products, and we try to be quick in that process. And this is showing good results. We have grown our pet food business threefold in the past few years, so this is a good success story. We are focusing on the premium brand owners, which is a bit more complicated, and it leaves also a better margin possibility. In the last year, we have, as I mentioned, focused on developing our own brand, and we have started up operations in China with a capacity of 20,000 tons of dry food. The reason for developing our own brand is that we expect that the OEM business in pet food will become more and more competitive over time, and it's better to have an own brand where you are controlling your margins to a certain extent in a better way. Now, so this is an investment in the future. I don't expect this to be from one day to another fixed. This will take a year or 3 to 5 in order to set up a successful brand with a significant part of our business. But I think that's also the horizon that we have. Our OEM business at the moment is good. We have good margins, we have good development, and also in volume. So there is no immediate pressure there. In our dry pet food, we see it as an opportunity. We have not produced dry pet food before. We produce animal feed, so a fish feed, which from a technological point of view is a very similar process. And therefore we have said we like to tap into that market too. Around 80% of the pet food is dry pet food and 20% is wet pet food. So it's a very big market segment that we are addressing. And the logic is also, since we are investing in a brand, we are investing in a distribution system. It is attractive to move more volume through that brand and through that distribution. So that's why we also want to be in dry pet food. Why China? In China, it is not easy to export dry pet food to China. That has to do with regulation. Dry pet food is categorized as animal feed, and animal feed is a business that is in which China wants to be self-sufficient. So there are many practical problems when you try to import that product. By the way, for wet pet food, it's different. This is categorized as a snack, and it's much easier to import into China. So we decided to set up our own production capacity in China, where we can produce our Monchu brand. At the moment, we are working on certification to international standards of this factory, so that is ISO, HACCP, BRC, and all the other relevant certifications. And once that is completed, which I expect to be done by the end of Q2, then we can also produce for other brands, because international brands have the same problem. They have difficulty to export dry pet food, and they are interested in local production capacity, but according to international standards. So we try to copy our quality standards of AAI in Thailand into the same system in our Shandong factory. This is our quarterly sales level of pet food and fish meal. And here you can see the relatively dip in Q2 and Q3 in 2019. However, we expect that this will be recovering in Q1 and going onwards. In Q4 it was 12% up, as I mentioned already. Sales revenues were 20% down, and for the main customers now we have adjusted our pricing to reflect the new exchange rates. So in 2020 I expect we will look at a better profitability. Half of our volume is in plastic cups, 1/3 in cans, and the rest is in plastic or in pouches. There's quite an increasing debate about sustainability and recyclability of packaging materials, and I expect that this debate will not get less, it will get more. Right now we are monitoring this situation. We are not in the business of developing packaging materials, but I know our suppliers are working on this. One thing to note is that actually cans are, when it comes to recyclability, much better than plastic cups and pouches right now. And we have sufficient capacity in cans. For this year, I expect that we will need to look at our pouch capacity. We may need to increase that, but of course we follow the debate on recyclability there, and we will not invest too much in a packaging option that is not sustainable in the long term. Like I mentioned, Monchu, we have completed a product lineup. One strong point of Monchu is that most of the dry pet food products contain 40% tuna meal and real meat meal. We can do that because we produce tuna in the same factory, and we can use that product as an ingredient for Monchu sales. And this is a strong point we see in the market. Again, the 51% in Shandong was completed, and we expect this to be operating in the second half of this year under international standards. Another big project we completed in last year was the automatic warehouse. This was around 300 million baht investment, and that project is now commissioned. We are operating it, we are filling it up, and as we do, we can also terminate the rental agreements for external warehouses, because now we have the space to store everything in our own facilities. So better control and lower cost is what we are aiming for, and I expect that we will see some of that already back in early 2020. Our tuna business, position our tuna business. We are not a big tuna company. We are also not a small company. We are a bit in between. We have no own brands. We do only OEM business. We don't intend to create brands. I think that market has been divided right now. And instead we focus on our niche market, which is a bit more complicated products than the standard products. A good thing is that we produce pet food and tuna, human tuna food in the same factory. So if we cannot book attractive orders, then we don't need to, because we can reallocate resources to the pet food and the other way around. So we have some flexibility there. This is our tuna sales level per quarter over the last few years. You see in the past year we have grown this business and we expect also in Q1 to see an increased volume. Like I mentioned, this has been mostly to our Middle East customer base, and there are some exciting developments there in which we think we can benefit also this year. 3/4 is in cans and 22% is in pouches. Those are the bigger pouches, like 3 kilo pouches or 1 kilo pouches that we sell to customers like 7-Eleven or Subway with the tuna that they need for their tuna sandwiches. 3% now is in what we call human VAP, and those are ready-to-eat meals. It's a combination of tuna and rice and other ingredients. Convenience articles, and we sell it mostly into Australia at the moment. Tuna price was historically low in Q4, around $900 per ton, and also the dollar was cheap, so altogether this was at a kind of record low price level for tuna raw material. In the meantime, this has changed. The prices are increasing again, and we expect that overall next year the price levels will be somewhat higher than they were in 2019. Our frozen business, like I mentioned, we have 2 factories in Samut Sakhon and in Suratani. In Suratani we buy mostly live shrimp straight from the farmers, and from those products we make nice products like sashimi shrimp or shrimp rings for different countries. A lot of export to Japan from there, also China. And in Samut Sakhon we used to do our commodity shrimp business there. We stopped that and we are now fully focusing on value-added products. Those are fried or pre-fried products. Think about coconut shrimp or other breaded shrimp forms, or what we call popcorn shrimp. It's a nice category. In fact, those products are not so much used in meals, but they are more served like snacks in America, in meetings or in functions or in bars and restaurants. So it's a bit of a different segment. It's a growing segment, and also in terms of product development there's plenty of room to expand. So it's an attractive segment, and we are gearing our Samut Sakhon plant towards that. Here's the sales performance of per quarter of our frozen segment, and you see that at the moment we are operating at lower volumes and lower sales levels. Our value-added products are 25% of our business, one quarter. One quarter also is our frozen squid business. We produce that in our Suratani factory. Squid is an attractive product. We have a good market position, mainly in Italy. However, raw material supply is a question mark. It has been declining over the past few years, and it's very much depending on the wild catch of Thai squid. So in that sense, it makes it not fully predictable. And we have managed to maintain a stable business in our squid business. That's also what we project going forward. But raw material availability remains a concern here. 39% is our other shrimp business, not our value added, but our other shrimp business. That contains some commodity business to Japan and China. And going forward, this segment will go down because we will reduce that part of our business. Our aquaculture feed business, we have many brands. Those are all business-to-business brands. We supply this to farmers. We have two basic products. One is a pressed pellet, which is sinking in a pond, and that is used for shrimp feeding. And we have an extruded pellet, which is expanded and which is floating in water, and we use that for fish feed. Rather flat this year, and rather flat last year. We saw a big increase in the first half of 2019, particularly in shrimp, but disappointing results in the second half of the year, and overall we ended up with a similar volume as the year before. As you can see, around 50-50 in pellets and 50-50 in extruders. Our focus is on shrimp feed and sea bass feed. Those are a bit more complicated feeds, but we also provide feed for like catfish and tilapia and other fish species in order to fill up our capacity and diversify a bit our business. In 2019, we have run a hatchery for shrimp, for baby shrimp larvae. We have done several cycles of this now with genetic materials that are imported from Hawaii and Florida. And there we saw very good results with a good performance in the farm. Our objective with this is first and foremost to produce a top quality shrimp larvae, which can show a better result to our customers, the farmers. And these results were so encouraging that we have decided to scale up this activity. And in this year we will aiming to produce around 500 million of larvae, and with this we hope that we can also improve our business with feed, and our customers are happy enough to also sell us their shrimp for our processing activities. On our strategy, I've shown this picture before. There's not a dramatic change in our strategy. We believe that it is important to move closer to our customers. That means cutting parts in the supply chain that are not really necessary, and to be able to communicate directly with our customers. And also to focus on our internal efficiencies, since costs remain an important element, of course. And this is what we want to continue focusing on. You are used to being reported in 5 different segments: frozen food, tuna, pet food, agri-feed, and distribution business. Now, our distribution is a little bit opportunistic business. It's not core strategy, and it's also relatively low in size. So we have decided to include this into our frozen food business and report in 4 segments: pet food, frozen, tuna, and feed. And that's how we will move forward. In our pet food, we monitor and we report on our dry pet food developments and also on our branded pet food developments. So that is in addition to the previous reporting structure. Same is true for frozen. We remain reporting on our different product portfolio, but also the imported food and the distribution business will be separately reported in our frozen business. We have launched our Cheers targets. Cheers is an umbrella project under which we group all our sustainability projects and our social, corporate and social responsibility projects. And this is steered from the top, from our board of directors. And we really have the ambition to make progress in this. Cheers is an acronym. The C stands for consumers, and here is a big focus on our product quality and our product development, which we believe is the core strength of the company. So quality systems, new products is any project related to this is included here. H for human development, and this is mostly for learning and development, so training of our existing employees. We realize that we are in the seafood business. It's not as sexy as making iPhones or other nice products. So attaining people and making sure they have the right skills is a challenge in our industry, and that's what we want to fill up for our own in our own way. E is for efficiency, not only efficiency in terms of operating cost and automation projects, which we are working on, but also efficiency of resources, mostly energy and water resources. And this is where we focus. We have set clear targets to reduce the number of the units of energy that we use for our products. Environment in itself, again, mostly focusing on our carbon footprint, on our water usage. It's good to note that we have decided to invest in a solar solution. First in our biggest factory, our roof will be covered with solar panels. And if that is working okay, we will expand this to our other factories as well. And an example of our environmental targets. Human rights, obeying the laws and the regulations remain a high focus for us, even though we think that in Thailand we have seen a lot of progress on forced labor and other things. Still, this issue is relevant also in our markets. We see that these things pop up on a regular basis, so we need to remain very strict in these policies. And finally, the S is for stakeholders, and mostly in our supply chain. We have set up our goals to also monitor and evaluate the practices of our suppliers and of our partners in, for example, logistics, in order to maintain the same standards that we are applying internally. So this is good. It's a clear way of managing all these developments, and we are now working on setting good zero-point measurements on what is our current situation and what kind of targets can we set so that we can measure our progress also by the end of this year. Looking at our 2020 target, in this table you see our volume and revenue developments on 2018-2019 and our target for 2020. Overall, you see our volume, an increase of 18% in our volume. In our frozen business, we target a 22% lower volume, and here you see the effect of a full year no commodity shrimp business to the US. It will take some time to grow our value-added products shrimp business. We are planning to invest in capacity, in frying capacity, in shrimp peeling capacity. But we are modest in our targets there, and we expect that this will pick up later in the year. Our tuna business, we expect a 29% growth to 12,000 ton, very much based on the current development with our existing customers, and I am quite comfortable with this target. Our pet food business increasing with 47% to almost 33,000 ton. There are three reasons why we think this is an achievable target. The first is that we see in our existing wet pet food customer base that demand is picking up again. And we also have expanded our installed base of customers. So we see an increase in volume of our wet pet food. We have started our dry pet food business in China, but also in Thailand. At the moment, we are outsourcing production of our dry pet food. But we will be investing in capacity ourselves. In our pet buoy factory, we will invest a dedicated facility for pet food. And that will contribute to our sales in the second half of this year. And finally, another growth factor is our own brand, Monchu. We have seen quite some improved sales levels now. We have invested in marketing and in a distribution system, both in Thailand and in China. We are now in the most important pet food shops. We have started distribution in modern retail in Thailand. And we have, since the end of last year, also established the distribution through internet. So the online channels, Lazada and Shopee in Thailand, and Tmall in China. So we expect that to contribute to the sales volumes in pet food. Our aquaculture feed business targeted to grow 16%, and that is based on the assumption that we think we can increase our market share. We don't expect the total market to increase, so it's really an increase of market share based on our good results of the shrimp larvae and the current feedback on our product quality. Revenues are projected to increase 7%. Now this this table is including our intercompany sales, so it's not fully consolidated. In 2019, we had quite some intercompany transactions. We expect that to be less in 2020. So if you look on a consolidated basis, our target will show a 10% increase, or a little bit more than 10% increase in sales revenues. 19% reduction of our frozen business. This is a result of the lower volumes. Our tuna business, 35%, a result of the higher volumes and also a higher tuna price. Our pet food business, 32%, and this is a result of higher volumes, but also a changed product mix. Dry pet food is per kilo a little bit cheaper than wet pet food, so that's why you see that the growth is 32% in sales and 47% in volume. Aquaculture feed, 22%, and that means 16% as a result of higher volumes, and also in our product mix, we will sell more shrimp feed, which is a bit more expensive than other feed. If you look at the pie charts, you see that our pet food will be 35% of our overall sales. That was 29% last year. And our frozen seafood business has decreased from 46% to 35%. This is, in summary, our frozen business a little bit down compared to last year, and tuna, pet food and feed business increased. Yeah, both come with some opportunities and some challenges, of course. We believe there is a good opportunity in our brand development, and this could surprise us in a positive way if we manage to position this in the right way. Our dry pet food initiative is also very promising. I expect that our Chinese business will do quite okay despite the corona issue. Our frozen VAP, there's a lot of work to be done there in product development and in setting up good distribution channels, capacity. But this is an area where I see a clear upside. And then in feed, our hatchery developments, very nice to see that, and that could have a good spin-off on our business. The challenges we are is in the remaining part of our commodity frozen shrimp business. This is an international competition, and we are at the moment okay in the markets we are operating, China and Japan, but it remains a competitive situation. Squid supply, I mentioned to that, this is a bit of a question mark. And in general, in shrimp feed, in Thailand, there is plenty of capacity. So this also remains a very competitive segment. A few numbers on our cash flow for 2020. We have in 2018 and 2019 we have had excellent cash flows of around 1.2 billion baht, and this was mainly due to a very positive development in our working capital. Now, in 2020, we expect that we can maintain the working capital days on the same level as last year. However, with increased volumes, this will mean that we also have an investment in working capital, and that's around 350 million baht. Therefore, our operating cash flow will be targeted around 285 million baht. Our capital expenditure is targeted to be 230 million baht. Main projects are in our pet food capacity line. We are investing in automation in our existing factories. and the remaining part is replacement of existing equipment. And herewith I conclude my presentation. In case there are any questions, please fire away. Yeah, that's a very good question, and I must admit to you that we have difficulty in predicting the tuna price just as much as you do. We take no risk, we take no position in tuna. We sell what we have and we buy what we need when we sell. So we are not speculating on tuna prices because it's difficult to predict. What happened last year was that catch was good. There was a lot of supply, and then you see generally if demand is not picking up right away, you see a big drop in tuna price. It looks like it's getting more volatile than a few years before. Yes, tuna is a relatively well-managed fishery. There are good systems of monitoring the fish that are swimming in the sea, the biomass. And as such, you would expect it to be also a bit more predictable. But apparently, sometimes the catch is extremely good and sometimes it's not. It depends on, I believe, on where the tuna is swimming in the sea. If it's on high or very deep, then the fishery has different. Yeah. The question is, what is the competitive advantage of our business compared to competitors in pet food? We are when we listen to our customers, we get a compliment that we are so quick in our development of new products. We are not using many salespeople. We let our product development team talk directly with our customers development team, so you don't waste too much time in different steps in a discussion. That's one thing. We have very good quality systems. I think in our history we get extremely low number of complaints, and therefore we have a big confidence in our production, and we can also show that to our customers. This is important in some markets. Pet food, you see a lot of recalls. For example, in America, you see many recalls, and the brand owners are looking for companies that are reliable and that are delivering good results. We are also actively communicating about this. If a product we think is or if a product ID is a bit risky, we communicate that to our customers and we find a solution for that. So that is the second reason. And the third reason is that I think we are competitive in our pricing. We have a nice lineup of our production capacity. We have focused on premium products and complete diets, which are more complicated, and we have some good processing technology to do that. So those are I think the three elements that we are quite competitive. Yeah. In Thailand, shrimp larvae are produced in many hatcheries. There are a lot of small hatcheries. There's one very big player in that market with good products, and there are many smaller hatcheries. Now, not everybody has access to those big player products, so the smaller hatcheries do have a market in itself, but the product quality is very fluctuating, and you have to be very disciplined in your quality management, because if you look at the very small larvae, you cannot always, it's not easy to see if this is a good quality or a bad quality larvae. And on the hatchery level you can see that, but the customer will have difficulty. So if you have a lot of bad quality larvae, in fact you should be disciplined enough to not sell them and destroy them. But yeah, this is also money. So many hatcheries do sell them anyway, and then the farmer has a problem with that. So that's, yeah. For us, yes. Yes, the quality is the key important part, and we have said we don't need to make a lot of profit on this hatchery activity. We want to provide a good quality product for the farmer. For us, it's more important to give this as a kind of good service, because I'm sure that we can get good business with our feed business and with our shrimp processing business. You're welcome. Any other question? No, also not on the online. So thank you very much for your attention, and I'll hope to see you next quarter again. Thank you. Bye-bye.